Here we have the daily price chart for NVIDIA Corporation, stock ticker NVDA. So if we take a look at the near-term price action for NVIDIA, we can see that some fairly critical support and resistance zones have already been broken for this stock. If we move in a bit here, we can see that the near-term high comes in at 127.66, which is important for a few different reasons. So in this video, we will be explaining why these specific price levels are important and critical for the stock going forward. And we will also develop some outlook perspectives here so that we can develop a trading strategy for this stock in the days and weeks ahead. So as things currently stand, we have recently broken above this important resistance zone, which came in at 120.15. Essentially, this was the price high, which posted during the August 1 trading session. As this movement higher started to happen, we can see this a bit of an extension here. As this movement higher began to happen, we did start to see a break in the negative momentum that was previously governing this stock. So specifically, if we go back to the stock's all-time highs, which posted at 140.76 during the June 20 trading session, we can see that negative trading volume started to develop during this period of time, and then the stock did start to lose some of its traction. If we go back here, the stock has obviously been on a tremendous run higher here. So clearly, most of the positive momentum was dominating and things were focused in the upward direction. However, during this trading session here, we did start to see a reversal, and share prices really did start to become governed by this dominant downside trend momentum that has been in place since roughly that June 20 trading period. So if we kind of move in a bit here, we can see that this relative strength index reading has since started to break. We did actually reach oversold territory during the June 30 trading session. Interestingly, lows here only came in at 102.54. And this was not actually the ultimate price low for the stock. As we can see, this occurred during the August 5 trading session when the stock reached lows of 90.69. But in this situation, we can see that the indicator reading here was not reaching oversold territory. So we had already reached that point, and the stock was starting to roll over out of that trading condition. So essentially what that had created at that point was a bullish divergence in the indicator reading. And this is a positive signal that did suggest that the stock would likely start to move higher. As we can see, that was the case here. Indicator readings were not confirming this price action lower to the downside. And we did see a fairly significant bounce off of the 78.6% Fibonacci retracement zone that came in just above the $89 mark, as well as this rising 200-day exponential moving average, which is this blue line, this ascending blue line on the daily price chart. So a lot of this could have been telegraphed in advance. As we can see here, the stock really did manage to find support at some very important key support levels. And then in addition to that, we could see that the indicator reading was not confirming these moves lower, and a bullish divergence was actually in place during that period of time. So as things stand currently, we do have to take an assessment of this more near-term price action and determine whether or not these movements higher are likely to continue. So if we sort of drill in here a bit, we can see that, yes, this indicator reading, this downside momentum condition here has been broken. So this does suggest that this prior downtrend here, the trending downward momentum, has run its course and completed itself. As this happened, the stock did manage to roll over out of oversold territory and break above its own the relative strength index, the exponential moving average for the relative strength index itself. So these are all positive signals here developing at the same time. But with all of that said, we really have to start to run into some potential issues here as far as continued potential upside is likely to continue going forward. So as we can see here, we're starting to now approach overbought territory. We're not quite there yet. At the moment, the indicator reading is coming in at roughly 60.80. So this does suggest that we have about 10 more points here to the top side before the stock is likely to become overbought. Before the stock is likely to become overbought once again. In addition to that, we did have some prior resistance, which was found at the 78.6% retracement of this more recent trending move lower. if we're looking at this trending move here, we can see that there was a 786 retracement coming in at roughly 126.60, and we've now slightly broken above this area. It's not a major break to the top side. It's not, we're not blowing through this level or anything like that. So, the potential for extension here could be a bit limited given the fact that, we didn't really forcefully break through this area. It's sort of a slow grind higher at this point. But overall, the trading activity here has been positive for the day, and we are still trading above the exponential moving average cluster. If we look specifically at these moving averages, we can see that they're all pointed in the positive direction. But the one concerning factor here is the fact that there's a lot of distance between these exponential moving averages, and then the share price itself is also trading well above the average cluster itself. So normally you don't see instances where there's this much distance between share prices and the exponential moving average cluster. So what this is starting to look like is the possibility that we will start to see a retracement here back toward the exponential moving averages. In other words, there would be a reversion to the mean here, so that the stock price can sort of take a breather a bit and move back, in ways that are more in line with the moving averages themselves. So if we were to see something like that, currently the price level to watch to the downside would come in at roughly 115.50. This would be a significant price zone here because, as we can see, the 20-day exponential moving average is starting to cross above the 50-day exponential moving average. So that is a bullish signal. But the real question here is, how long can the stock remain trading well above the exponential moving average cluster itself? There's a significant distance here. And if we go back on the price chart a bit, we can see that situations where the stock has deviated far from its exponential moving averages have generally been met with reversal periods where the stock had to turn around and move back toward the exponential moving average cluster itself. One example here comes in during the March 8 trading period. We can point to that a bit back here, where we can see that the stock did start to deviate far to the top side, but eventually we had to sort of move back into those moving averages in order to revert to the mean and to avoid trading in excess of those moving averages. So at the moment, we are seeing some significant breaks to the top side, but the real question is whether or not these trading moves can continue with the share price itself trading so far above its averages. So here's the current market update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.